the European Central Bank, I should say, will not be putting rates up anytime soon, it seems.
Well, we don't know. Maybe next month, but at least not this month in February, because the European Central Bank says that it's keeping its benchmark interest rate steady at 0.25%. It's resisting calls to bring rates down further to stimulate the Eurozone economy. In a monthly press conference, ECB chief Mario Draghi said that the Eurozone economy remains weak, but he played down fears that the Eurozone is heading for deflation or falling consumer prices. He said, though, that the central bank would be ready to act if needed. Let's listen in.
As I said many times, we're going to be extremely cautious with this recovery because it's still fragile and it's still uneven. And it really starts from low levels of activity. But so far, it's proceeding.
OK, Mario Draghi saying that he is ready to act if need be there in Frankfurt earlier. We're going to move on now. The car sector is attracting attention this Thursday, and Daimler is among the companies in the spotlight. This as the German company is revving up, saying it expects a rise in both sales and profits this year. That forecast came as the Mercedes maker reported a fourth quarter operating profit of €2.5 billion. That's 45% higher than during the October to December period back in 2012. Mercedes has fallen behind rivals BMW and Audi in terms of sales, but it aims to introduce 30 new models before 2020 to regain the top spot. Over in the US, General Motors fell short of expectations when it announced fourth quarter earnings. GM made $913 million, 2% more than in the same period in 2012. But analysts, they were hoping for more. GM is doing well in North America in particular, but it's weighed down by weakness in Europe and South America. Here in France, carmaker Peugeot Citroen is trying to turn its fortunes around. Sales, they've fallen and losses, they've been mounting in the past few years. The carmaker is now trying to lure customers back to showrooms with a new lineup of cars. The Citroen C4 Cactus is seen as the first step in those efforts, and Delano de Souza has more on its introduction.
Touting it as revolutionary, Citroën unveiled the C4 Cactus in Paris. The car brand is attempting to reposition itself by simplifying the bells and whistles on board. Instrument controls are not spread out on the dashboard. Instead, everything's integrated to a touchscreen.
The word simplicity is something that's guiding us, because here we have a car that's easy and not stressful. But at the same time, it has value, a value that's positioned where it counts most for the clients.
Citroën has built the Cactus as lightweight and more fuel efficient. By using aluminium and other lightweight materials, the car's designers were able to shave 200 kilograms off its weight. The car has innovative features like air bumps on its sides, designed to protect the body from light scratches and dents. And with a price tag of less than €15,000, Citroën is hoping to cater for customers in search of savings.
When we have less money available to buy a vehicle, we buy cheaper. We try to be smart in how we buy.
Citroën's move comes after the success of rival Renault's low-cost Dacia. The brand has grown to represent over 40% of the group's sales. Although Citroën refutes the Cactus's low-cost tag, the company appears to be steering away from high-end technology.
OK, unfortunately, we don't have a lot of time left, but I can tell you that stock markets are having a pretty good day. Over in the United States, the Dow and the S&P 500 are on track for their best day of the year so far. Traders, they're looking ahead to Friday's all-important jobless report. One of the shares in focus this session is Twitter. We're seeing Twitter shares down more than 22% this hour on the back of a pretty lackluster quarterly report. It's first as a public company. Let's also talk you through Europe. In Europe earlier, we saw stock markets closing in positive territory here as well, with some real gains there. For the Paris CAC 40, for instance, it was up 1.7%. The euro was also seen to be trading higher as the ECB refrained from cutting interest rates. And with that, I'm going to hand it back to you, Laura.
Thanks very much indeed, Marcus Carlson there with the business news. It's time to find out what's got people clicking and sharing and tweeting and liking over the past 24 hours. It's time for our daily dose of web news.